Welcome back. Well, the rupee fall does continue. In fact, it's hit a fresh record low in today's trading session. It's crossed that key critical 90-odd mark in terms of the rupee. And as you can see, 90.25, 3 consecutive days of losses or depreciation that we've seen for the rupee. But we do have Mahendra Kumar, Jajoo, CIO, Fixed Income Mirae Asset Investment Manager, is joining in to discuss his take on the rupee. Well, thanks very much, Mahendra, for joining in. We've crossed all of these critical levels that many of the technical and fundamental experts have been discussing will possibly be hit, by the end of the year or maybe going into next year as well. Where do you think the rupee is possibly going to stabilize at? And do you think that there's a further fall in place?
So at this point, the direction is clearly for the rupee to depreciate further. 90, just a number. The momentum is towards depreciation of rupee. At this point, we have a very, very strong domestic macro, but our global macro seems to be a little bit of a concern right now. We have a slowing export, and because of the domestic consumption story, we have swelling imports. So that is affecting our current account deficit, which is expected to comfortably breach 1% mark in the current year. We have very delicate situation on the trade deal front. There is no clarity as of now. While there is hope, but there is no outline of what the deal might be, and it is beginning to affect our competitiveness on the export side. And then we have seen consistent outflow from the FPIs, because in the current year, the markets like Korea or Japan have done well, and therefore the global investors have been allocating to those markets. And finally, we have seen some of the currencies in the, for example, Latin American countries like Brazil and Mexico, they have done 10% plus appreciation on the dollar. So I think as a cumulative impact of all this, rupee is under pressure. And when everyone realizes, I think the momentum obviously takes the movement much faster, and the targets are easily breached. So I think today is one of those days when the entire force is against the rupee.
So do you think, Mahendra, that will continue? What kind of levels are you watching out for, say, in the next 3 to 6 months? And when you said it's allowed to depreciate, you don't see any intervention coming in from the RBI in terms of using, foreign exchange reserves, other methods?
We have a very, very strong forex reserve situation. However, the rupee is weakening in line with the fundamentals, so to say. In the last year, in 2024, the rupee was amongst the best performing currencies in the second half of 2024, but then that took its toll on the domestic economy. So we have seen at the beginning of this year, RBI switching the gear, and RBI instituted a very, very accommodative monetary policy. They cut the policy rate by 100 basis points during this year. They cut the CRR by 125 basis points. They did the open market purchases of bonds of about 2.5 lakh crores, and that then gave the momentum back to the domestic economy. And we are now, seeing this kind of a growth momentum. At the same time, rupee suffered. So I think at this point, the Reserve Bank is more focused on calibrating and moderating the volatility in the rupee movement, but I don't think there is any clear guidance or indication as to whether or not they allow or accept this depreciation. So we will know, but I don't think that there will be any meaningful intervention to change the direction, but obviously to moderate and smoothen the volatility, there will be periodic interventions.
Okay, periodic interventions to smoothen the volatility. Well, thanks very much, Mahendra, for joining in and speaking with us about the rupee depreciation. Around a 4.5% depreciation in the rupee is what we've seen in 2025 already, and over 1% odd in just the past month. We'll take a short break, but get you more on the markets on the other side. Stay tuned.